us having some new faces on here, let's dive into topics that are meaningful that can help everybody. All right. So we all should kind of keep this in the back of our minds, is that the concept, right, especially in the ICT space, the concept is not the edge. All right. The overall context or the market framework at a particular time, that is the edge. All right. So biggest issue, especially, you just getting started in this space, we take liquidity sweep, structural shift, fair value gap, right? We allow this concept to hold too much weight. All right. And the reason I just asked that question inside of the Discord, I'm going to check and see what all right. So I just asked it, so not a lot of responses yet. But everybody so far is 100%, everybody saying this is bearish, right? If you guys are on the call, I mean, you guys can answer this question, right? Is this setup, is it bearish or is it bullish? Right. But nonetheless, as ICT traders, we take this concept, too heavy in terms of face value. All right. So it's very important before the trader learns what to trade. Okay, they must learn how to see the market. So if you've ever been a part of the boot camps, you guys know that we start off with those first 4 lectures. It builds the framework, right? I guess it gives us a paradigm shift in terms of how to first see price. All right. And so a concept can only be applied correctly when the trader already understands why it exists, where it belongs in price delivery, which phase, this is super important. That's why why we always try to give you guys the view of the buy or sell program so that you can start to internalize it. It's not that you have to trade based on the buy and sell program. It's just for internalization purposes, right? Also, which phase of the market cycle is a particular concept valid in, and which phase is it invalid, right? And then how does the context change the meaning of that concept? So again, ICT 2022 YouTube model, right? My personal belief is that it is very fragmented, right? And short-sighted, right? Simply because concept without context means nothing. Okay. So I asked this question, is this particular setup, I guess you guys already have the answer. Is this setup bearish or bullish? All right. I just want to see a few answers in the chat just so we can, have a little bit of open dialogue about it. Right. If you guys see this setup, are you taking shorts? Are you taking longs? What are you doing? Deontay, how about you take a stab at it?
I'm waiting for more confirmation for me.
Okay. Okay.
I'm waiting.
And what is that confirmation of? Like what
it'll be the either power to or another change state delivery to confirm it. Like I would think of the bearish idea, but I would want another confirmation to confirm it. You see what I'm saying?
Okay.
Then that's based off the bootcamp learning information. Yes, before I would say bearish, take the fair value gap and keep it moving. But it all depends on the time frame too, when you think about it.
Okay. Okay.
In my opinion, that is just balanced price, right? Right. So we need to take it from there. So we need to see realignment, and also we need to have a higher context of why the market have done this in a specific place, in my personal opinion, right?
Okay. That's a really good answer. Who was that? Who gave it? That's a new voice.
The trading sand.
I heard that voice before. Okay. Got it. All right, good answer. Really good answer. Does anybody else want to take a stab at this? Because I want the group as a whole. Okay, neither. All right. I like it. Let's get one more answer, right? Because I would love to see. Can you guys still hear me? Deontay, can you hear me still?
Yeah, I still hear you.
Okay, all right. I saw the connection thing. One more answer, guys. So, is it neither? Is it bullish? Is it bearish? Right? What are you doing in this situation? Yeah, one more vote here, right? Bearish. All right, cool. Okay, now the reality is, as my guy said on a second ago, is that essentially this is neither bullish or bearish. All right, it's neutral. Okay, one person can see this as a liquidity sweep, right? Expansion lower, and then they're prepared to sell this fair value gap. Now, my personal belief is that is a very short-sighted view, right? Because at that moment, all you're just relying heavily on concept. And the issue in the ICT space is, especially when you start learning, you jump to the chart and you go straight to concept, right? And then you say, oh, well, ICT said it's liquidity sweep, it goes here, and then I enter, and I always, it looks like it's going to go in my direction, and then it goes here, right? And it feels like a dead end point because you just cannot explain what's happening, right? You don't know what's happening. Okay. So again, this is neutral, right? And the only thing that changes or validates the meaning of this are these few points down below. Okay. Because we can see this. And actually, let me give you the other person's view, right? So we said that one person can view this as a potential bearish setup where they go short here, but another person can view this as a bullish setup, right? Whereas what they're saying is, all right, yes, there's a fair value gap here, right? But instead of me seeing that fair value gap as a means to be bearish again or go bearish, I'm looking at that fair value gap and I'm wanting to see if price turns it into an inversion fair value gap, right? So now instead of me seeing this as, a liquidity sweep structural shift here, I'm seeing this as just a sell stop liquidity sweep, and I'm seeing this as a potential inversion fair value gap, so on and so forth. And the answer is who's right and who's wrong, right? Well, that is decided by the context at that particular time. All right. So few things to just take note of is the same pattern, same liquidity sweep, same fair value gap, two completely opposite valid interpretations. Okay, given the point in time that this happens. And the only thing that decides which one is correct is where it occurs in the delivery cycle, right? And for this case, I'll just say the market, the buyer sell program. All right, so it's price here, right? Buy side of the curve, or are we here, sell side of the curve? And then it becomes even more fractal than that because you have buy side of the curve here, sell side of the curve here, right? But this whole thing is sell side of the curve. This whole thing is buy side of the curve, right? So you have fractals, you have market maker models within market maker models, right? Also, which side of the market is accumulating versus distributing? What narrative the higher time frame is enforcing? All right. What that means is if we take this, this same scenario, right? And let's say we're in a market. Let me move this over some more. We're in the market where, right? And if you've been a previous student or if you've watched previous content, then you'd already know this. But in this particular time, now is this setup? Should I be seeing this setup as bearish or bullish? What am I depicting here with these down close candles? Yes, buy side of the curve, order flow. So it depends on what market structure it appears and from what Peter rate. Exactly. Right. Right. So now that we've just added context or just overall market framework, now we look at that same pattern, same liquidity sweep, same fair value gap, right? And we're saying, oh, yeah, I should, if the down close candles are supporting price, right? And we're obviously on the buy side of a curve, right? Maybe the higher time frame PDA rate is here. We haven't made it to that higher time frame PDA rate. This is where you guys, if you guys are in the group, you guys always hear us say open draw, right? Well, that level, there's a key level that has not been met. All right. Well, there's unfinished business on the buy side. So I'm just going to see this as short-term low, engineered sell stop liquidity pool, right? And then I'm using this fair value gap to collect information. All right. So the moment price clears that fair value gap, and then I see that this this intermediate time frame. How do I get this out of the way? And that the moment I see this intermediate time frame give me like a bullish change in state of delivery, right? Maybe power of two, so on and so forth. At that point, right, it's pretty valid. We've just traded from higher time frame PDA rate down close candle support and price. And now this scenario plays out, or it's valid as bullish, right? Now, the same setup, different scenario would be now we're in a market where our up close candles are supporting the direction of price. Right? So here we are, goes up. Let me do this. The line represents a lower time frame delivery, right? All right, so now it's going back up into the up close candle, right? So we respect it here, we respect it here. Now, once again, same pattern, same liquidity sweep, same fair value gap. Now, within this context, that scenario is bearish. All right, so very small lesson, very direct lesson, but it is definitely something that we have to pay attention to, because when we go to a chart and we go straight to ICT concept, we go straight to looking for any fair value gap, any liquidity sweep, any order block, right? That is where we go wrong. And it tends to feel like a dead end when we can't fix it. Does anybody have any questions or any inputs about that little lesson here? No? Okay. All right. Let's go to, I want to take you guys to the actual, so I was on a one-on-one call. We were looking at New Zealand USD. All right. And basically, the guy, the trader who was on that call, he's applying.
The person have a question.
Somebody has a question?
Yeah, I do. Sorry.
Okay. Okay. Go ahead.
When we are in one of the sides, for example, in the buy side of the curve of the market, right? In the
Okay.
market, that buy order or the sell order from the buy side of the curve, we can see that as a low time frame reaccumulations. That's the first question. And the second one is that, are we going to use those sales range from the buy side of the curve to mitigate them and then push the price down as a continuation? And that would be the full confirmation that we are in the sell side of the curve.
Okay. So the first question that you asked is on the buy side of the curve, right? Where we will see higher time frame down close candles, right? Maybe weekly. I don't know if you guys remember a week ago. We came into the market. We were looking at the dollar yen, right? And it was primarily because on the weekly chart, right, price was running into weekly down close candles, and we were seeing price trade back down inside of the range. So we're like, oh wow, this is perfect scenario, right? There's unfinished business above. So just correct me if I'm wrong, but I believe your question was, do we just see this as a lower time frame reaccumulation? Is that what you're asking?
Yes. Yeah, even when you are in a small time frame, market making models inside market making model. So sometimes I see a market making model in low time frame that belongs to a higher time frame market making model. Then I want to see those. I want to position myself in when the market violate the hedging program of one side of the curve. But I want to be able to see those in reaccumulations, because one of the things that is haunted me since I joined this, which is an amazing place that gives a clear view of what price do, is that when price go back to accumulations to continue lower, or when that violates to the upside in the high time frame will be seen as a down close range to in the other side of the curve. I don't know if you get the point. I don't know, maybe
Yeah.
yeah.
So I think what you're saying is, I don't know if you're saying you want to see, like, okay, let's imagine we're in. I'm trying to. I can't hear you super clearly, but what I think we're getting at is on this side of the curve. Are you saying you want to see this same area where there was reaccumulation, kind of have some redistribution on this side?
That's right.
Okay. Okay. All right. Yeah. We'll look at an example. We'll look at an example. All right. But the first, so just going back to the first question, wanting to see this reaccumulation on a lower time frame. Yes, it's fractal, right? There's buy and sell programs inside of buy and sell programs. So if we go up to this right here, right? So just imagine that this. I'm gonna just bring it over here. All right, I'm gonna make it smaller.
I'm sorry to divert the whole thing, but I think that my questions, a lot of people are related to the same question. I'm sorry.
Nah, it's fine. Look, I prefer you guys to ask as many questions as you want. Like these lectures are not for me; they're for you guys. I mean, I enjoy them, but I, I want you guys to, hey, pick my brain, dig into as much as we can dig into. So it's fine. All right. So this is essentially what you're saying right here. All right. This is, let's say this is the buy side of a curve. We have a fair value gap up here that price is trying to reprice into, right? So as a trader, we've come to the chart and we've already internalized, and let me say this is not time frame specific, all right, because market is fractal. This could be a 15-minute fair value gap. This could be a 1-minute time frame. This could be a daily fair value gap. This could be a 1-hour time frame. All right. Doesn't matter. Okay, it's just delivery, right? Basically, what we're saying is, hey, price is going to go inside of that range and out of that range, right? That's what we're expecting. We're expecting price to run and attack. Let's just imagine price left behind some type of low resistant, right, liquidity pool, and we're like, oh yeah, it's going to run those lows out, right? So now we're inside of the market here, and what's been happening the whole time is that, this downside delivery on, let's just say this is the 15-minute chart. Let's say this is the 15-minute chart on these down close candles. This is like a 4-hour chart. And then we're reading the delivery on the 5-minute chart, right? So if you guys can, make sense of what I just said there. So here, all of these movements is going to give you the same thing. If we were to dig inside of this lower time frame, right? All these movements is going to give you the same thing, right? On a lower time frame, the up close candles are square price, and it's going to get down to either the fair value gap, right? Maybe some point of fair valuation, which is usually the high of down close candle. And we go here, take out stops. Let me give you this scenario. We go here, let's say we create highs, we take out those highs, we run the lows, whereas some people are still going to be seeing this as, oh, there's a fair value gap there, I want to keep going short. No, you're down inside of the higher time frame PDA rate. There's unfinished business above market price. This is reaccumulation taking place. Right? Now you're on the buy side of the curve, attacking this high. Right? Given that price moves from stops to imbalance, or external range back to internal range, once we run this high, right, price then is going to seek fair value, right? So we come back into the range, and then this is same thing. This is that same image that we drew earlier, right? Here, boom, 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 boom. Now, I want to say this too. This same image, right? Let's imagine that it's up here. right? It's up here, and this is fair value gap, and you know that hey, there's a clean imbalance on the chart right here, right? It's taking liquidity up here. It starts to shift a little bit, and this you're like in the middle of this expansion lower, right? That same pattern is valid at this point, right? But when you get to the more parent order flow PDA rate, it's no longer valid. You then have to use the information or use the concepts in a different way, right? The meaning begins to shift. All right. So yes, reaccumulation. Sorry if I took a long time to just to answer that.
Thank you so much, sir, for your whole explanation. Straight out. So,
Yes, sir. Absolutely. So does that answer both questions?
yes, yes, because
Okay.
now I know that when the market violates a down close range in the buy side of the curve, now I am in the sell side of the curve, and all the real, I'm gonna give only credit to balanced price that is pointing to the sell side, not to the buy side.
Mm-hmm. Yes, and let me give you one more tip. This is for everybody, right? Because something that you just said is missing one step. It's not that obviously let's see, I gotta fix the drawing. Right. All right, so let's say this is the low of the down close candle. We just ran up, we ran into the PDA, and now we're coming back down, right? We expand lower, fair value gaps are in place, boom, right? So we just took out this old phase of reaccumulation, right? This is a low. Okay. Now, before this low is a market structural shift, it is what? What comes first? The structural shift or the fact that this is just a liquidity pool?
In my point of view, that's a dealing range. And so, right?
Say that one more time.
That's a dealing range.
Yeah, dealing range, right? Buy side sweep, sell side sweep, right? New dealing range. But the point I'm trying to make here is it's not just that when price takes out this phase, we have to validate rather this is just a liquidity sweep, right? Or if there's still intent for bearish delivery, right? Because sometimes it can take out that level, right? And one thing that Calvin really he really focuses on is the way that price actually leaves a high or a low, right? So he likes to see um, price really show a little bit more intent, a lot of volume as it's leaving a high or a low. All right. For me, right, I prefer pretty much the same thing, but I like to see the intent after the price comes back inside of this range. I like to see what's happening here, right? Because we oftentimes we get very high on hey, I gotta get in right at the smart money universal, right? The reality is this is a pretty long range, right? There's a shit ton of opportunity within this range. So I don't have to be in the market up here. I can collect information, right? And there's a lot of opportunity as price continues to expand, right? OTE setups here, right? You're gonna be more confident in this setup as opposed to the setups up here, right? Because at this point, right? Especially even in this setup, this is kind of EU from last week, right? EU had equal lows. It started moving, and we're like, okay, cool. It's pretty obvious we're gonna go to those equal lows, right? But what you see is this old reaccumulation turns to new distribution. Old reaccumulation turns to new distribution, right? Um, yeah.
Chris, in this case, we have to wait for the last phase of reaccumulation need to be taken out. Then only we have to engage in our bearish side, right? After
Yeah.
mitigating the higher time frame mitigation. So
Yes. Yeah.
I have to see the last phase of reaccumulation need to be displaced. Then I will engage into bearish, right?
Yes. 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 The displacement aspect is key. Yes, you want to see that. Right. So let's go to the example um, that we were looking at that I was looking at with one of my guys. So we were looking at New Zealand USD. Obviously, you guys have seen the analysis. We're seeing this as a sale program. We know that hey, price is just redistributing lower. Up close weekly candles are supporting the direction of price, and this is where we are at this point in time, right? So We have a rejection block here, and then this low is an equal low with some old lows. All right, so we're expecting price to go lower. Okay, so he's right in terms of what he's expecting price to do. Okay, but the only issue is the same issue that every ICT trader shares, which is it's just the timing aspect, right? Most times you're never really wrong. You're just at the wrong time. So weekly order block, price comes up, and this is exactly what he sees. He sees, I think this is the previous day's high, right? Previous day high liquidity sweep. If you look at the delivery of these candles, that's up, down, up. Very strong candle, right? That's that same pattern that we just draw. Up, down, fair value gap, very strong pattern. And then you can see the wick here looks like it's going to move in direction, but then they even go for one more liquidity sweep and then expansion, right? So this is what it does. Goes here, comes up, boom, and then boom, right? Why is this invalid at that particular time? Just looking at your 4-hour chart. Or why is it, let me say it like this. Why is it invalid for a bearish scenario?
Because I think that we just fail to just have a fractal to the downside, and we just take the first liquidity rate to the upside, right?
Yeah, but there's a more objective answer to it that you can apply in every single scenario. Let me check the chat. Absolutely, right? We're still on the buy side of the curve. Okay, how do you know we're on the buy side of the curve? Can you mark the chart just to show these guys like how you are arriving at I guess that answer? All right, let me ask you guys this, right? Would you run through a brick wall? Right? Would anybody in here try to run full speed through a brick wall? Probably not, right? All right. So shorting this right here, right, is you're running through a brick wall, right? What is the brick wall? The brick wall is this down close 4-hour down close candle. All right. So I always say, hey, the market is this the concepts, ICT concepts is kind of applied. It's the same relative nature of uh, laws of physics or the Newton's laws of physics, right? Or motion, where it says that an object is going to move in a certain direction until met with a much higher, stronger force, right? In this case, we are still on the buy side of the curve, right? So when we talk about time frame alignment, weekly chart, bearish, daily chart equals bearish, 4-hour chart equals bullish, right? So me looking at a lower time frame, taking this 15-minute short, basically what I'm doing is, if we go back and we think about our little drawing from earlier, this is the market that he's playing in, right? He's going short right into a brick wall, right? Because these guys are supporting the direction of price, right? So let's go to the lower time frame and let's just look and see what it looks like. This happens all the time. This happens to everybody. All right, so opening price of that 4-hour candle here. Right now, it's not a bad idea. Like if you trade intraday, you understand where you are and you know that, hey, this is low hanging fruit. I just need to take my execution at my profit at low hanging fruit. Maybe you take a 1-to-1, 1-to-1.5, or just a quick one to just you're not expecting price to just go you know as far as you think it's going to go in this case. So this is nice, right? This is a sweep here, expansion lower, right? And price coming up inside of the fair value gap. It's probably a 1-hour fair value. Yeah, 1-hour fair value gap. There's a little breaker here. right? This is nice, right? But the issue is understanding where you are in the overall market cycle, which that's really, really, really important. All right. And that's why we go here, we have a strong rejection, and then boom, an expansion. All right. So what you can also see here is when it gets into the 1 hour PDA rate, and we're also inside of this breaker, right? You have a 15-minute change in state. Right. So executions could have been taken, and then you just, you take your profit here. I don't know what it looks like on a 5-minute chart. Let's see. Yeah, even 5-minute, right? 5-minute gives us the same fractal, right? We go, this is the last phase of accumulation on the 5-minute. We expand, we have a failure swing, right? And you see the way price leaves the low, right? With volume, and we leave behind sponsorship. That's pretty nice, right? You get a little bit of we consolidate here. Pretty decent closure, right? Executions could have been taken here on a 5-minute, and you just attack low-hanging fruit, understanding where you are in the chart. Or you just simply wait and say, hey, well, I'm still on the buy side of the curve. I'm not going to do anything. Now, at this point, we clear this level out. You see the way we leave this low, right? Very intentful. And we leave a fair value gap behind. Order block, the order block fair value gap combination is that is our support and resistance as ICT traders, right? Whenever we see that and it's aligned with a certain side of the curve, in this case, sell side of the curve, right? There's a very strong support or resistance level for price. Okay, so I wanted to point that out because I felt like it was something that everybody could learn from. And the key note from that conversation is just remember that the concept is neutral. So whenever you see something in the chart, right, which all of us, we're looking at a short-term low, we want to see a short-term high, we want to see that high liquidated, right? We want to see price expand. We're looking for a fair value gap. That's cool. But always tell yourself, hey, this is neutral, right? You need to ask yourself these questions, right? Where is this occurring in the entire delivery cycle? Which side of the market, are we accumulating? Are we distributing, right? Those are very important questions, and they'll help you from getting tied up into the wrong side of the market. Anybody have any questions about current price action or what we have for the week coming up? And looking at euro, as you guys know, we had been. Go ahead.
Yeah, still in Euro USD, EU and GU, we are in bearish, right, Chris?
Yeah. Here's the key though, right? So as you guys know, we were looking at let me bring GU up. So GU from a quarterly perspective, right? We've come through inversion fair value gap, right? Reaccumulations here, right? Sell side sweep reaccumulation here, and we close above that down close candle. So what we're looking at is GU here, right? Obviously, there's equal highs here, right? That's the 138 level that we were calling around the time we were getting the price was moving up. We thought we'd just go right to 1.38. But nonetheless, this fair value gap is the area that we felt like price would run to. Okay, so what we're seeing is this is like point A, point B is always the PDA rate, and then point C is always terminus. Okay, the thing is we're still in line with point A to point B in terms of order flow, right? So order flow right now is still bearish as you mentioned. Same thing with EU. Now what could happen if you notice EU never ran into the fair value gap, right? It doesn't mean that it won't, but at this point in time, we haven't. All right. So looking at a weekly chart, on the weekly chart from a technical standpoint, right? Just following rules, EU bearish, right? The weekly up close candles are holding in the direction of price. From a daily chart, EU bearish, right? Now, what would be very nice is if, let me go to weekly first. What would be really nice is if EU closed. This is, let me pull up forex.com. This is FXCM. All right. What would be really nice is if EU closes here on the weekly. At that point on the weekly, we'd commit fully to bullishness. Now, it doesn't mean that we can't read price on the lower time frame inside of here and make wise decisions, okay? Because we're already getting, we ran these lows. We see this candle here closing back inside of the range, which is giving us signs that, hey, sentiment may be shifting. There's also SMT between EU and GU. And now we have a bullish fair value gap. We're closing out sell side fair value gaps. So the signs are being priced in. All right. It's just that if I were to ask anybody on this call and say, hey, do we have a daily change in state of delivery? You can't say yes, because the series of candles starts here. Right. But when we get this, and I'll wait, right? I'll put my attention on different assets. Now Calvin, he's more from an intraday perspective, so obviously he's going to be in there with you guys. But for me, the true commitment comes at this point, right? And once we get above this point and we close, this high is on the menu. All right. So right now we're just inside of this range. It's kind of a tough call. What I'd love to see is if we were to have a failure swing and come here, or even just go straight above this level, that opening price, that would be really nice. 4 hour is already starting to give us a shift, right? So 4 hour order flow is bullish on the 4 hour. The only issue for me is that it's just kind of tricky as to, hey, are we inside of this range to run through the range, or are we inside of this range just to go to some type of premium? And I don't have the answer for that, right? GU's the same way, but obviously GU has taken out these lows. GU has given us a daily change in state of delivery. Right now, if we see another down close day followed by another daily expansion, that begins to validate what we want to see even more. Right. DXY. We have this fair value gap inside of here. It's just a matter of seeing what we do inside of this. But DXY from a weekly standpoint is still bullish, right? There's nothing bearish confirmed. This was a quarterly imbalance. So we also see SMT amongst DXY and EU, right? Because once again, EU never ran into the quarterly imbalance. Okay. So the signs are there, guys, that hey, the bullishness, it wants to kick back in. It's not fully confirmed, but it doesn't mean that we don't keep our eyes open. All right, nothing in the chat. Any other asset that you guys would like to look at? Oh, let's look at the yen, right? Especially for the guys in
Chris,
yes.
can we just look at the metals?
Yeah. They've been kind of stagnant, right? I don't think they moved a lot last week. Yeah. Gold, silver. Yeah. All right. Hang on. Okay, so yeah, I'm looking at this with this down close candle. I'm gonna just take the bodies of the candles here. I'm looking at this as the dealing range. For this, if we go to a daily chart, there's obviously we know that gold is bullish, right? Um, but for the current moment in time, that there's no information that tells us like either way. We know the long term is bullish, right? I'd much rather see this. I don't believe that we're going to leave the range with this type of price action. I think this is just a consolidation, more of consolidation, manipulation type of move, right? Before an expansion. That's what I would rather see. But for coming into the week, I don't really see anything that looks too promising. Did you have a certain perspective on this?
Uh, no, not necessarily because well, this is the point where I'm stuck at because it's stuck in between two PDRAs, the bullish frame gap and the bearish frame gap. So it's kind of tricky. So I thought maybe you could have like a better idea.
Yeah. This is where you just gotta let this asset develop. Like my guy in the chat said, right? You can see this is this, right? So we're it's just in this distribution phase right now. I think this is just a short term correction because we've been bullish for I mean shit like
But
more
in
than
the
this.
short in a short perspective, the only place that I have in my eyes is previous week opening gap, where I would like to see the market maker reprice to that area. But overall, this is the moment when I think that we need to use patience as our biggest
Mhm.
ally to allow the market to lead the way in the high time frame and allow the real things to happen in order for us to take some kind of wise decision or more covered decision, I think.
Yeah, no, you're right. You're absolutely right. This is nice. This gap volume balance or whatever we choose to call it. We should see some rejection from this, and then we could also use this guys as information because in the future, knowing that hey, this is a gap in price, and there's always going to be some strong rejection from these areas. If we go and we go here, we here, and the say uh, equilibrium is here, and we get a smart money reversal. So accumulation, manipulation, and then we begin to distribute or go higher, right? We offset accumulation, we go higher. If we get a weekly close or even a daily close through this level, right? Then you use those gaps as information, right? If we get a closure through this level, then now it means that hey, this level is going to be support. So then the next day is 9 times out of 10 going to be something like this, right? It might dig down deep below the level, right? But usually there's a strong rejection, um, from those particular levels. So I think it's a matter of just being patient. We got to let it play out. Same thing with silver. Dealing range would be from this level to here, right? We aren't quite at uh, equilibrium, so I do think there is room to drive us lower. Um, let's keep in mind though we have this strong rejection, so all in all, is there's no clear means for engaging in price here, right? So we'll watch it over the next week or so. Um, someone said the indices, I think NQ, ES. All right. I know last week on the call. Oh, well, that was Russell. I'll go to Russell in a second. Here's what I'm seeing for Nasdaq. I've been watching this for a minute, but that week where Trump made those comments, and the market just tanked, and then we came back. He made another comment before the market opened, going into the next week. and the market gapped up. I've been looking at this gap, right? There has not been any sell side or buy side delivery offered within this area, right? So I believe that price will be pulled to this area. Now, certain feeds will show this as a candle, right? But for me, this is a true gap in price. Like some feeds will show it like this, which essentially is just still equal lows. Also see, I'm sure we all see this level here. I like about this level is we have a redistribution from this point. Now, what throws a little bit of a twist in it is the way we closed last week after running this low, right? And this here. So this delivery is a weekly down close candle, right? So it's not the most obvious scenario. I do believe that we deliver here, but I just don't know that I would be confident in taking the trades from this point. Like maybe if I think the better scenarios, if there's a closure down here and we're in close proximity to those lows, then there might be a little more confidence for those executions, short-term executions to those lows. But for right now, you'd be shorting into a brick wall. And there's also, I didn't even see this, there's also this weekly volume bounce. So that's probably why we had that strong rejection last week, because I was wondering, even with Russell, it had a very strong rejection. It looked like it was pushing harder down below, and it just rejected before the day closed. And that's typically what happens when you have these volume imbalances, you know. And we ran this low. So personally, I don't think that it's a great environment to trade in. I think there's just a lot of like fragmented business that needs to be taken care of, right? We have a gap here, and there's just no delivery within here at all. So you know, if you trade this, you're just trading inside of a range that is pretty indecisive. Does anybody share a different view for the indices?
Same view only, Chris, because the close is good. So we have to see how it's developed, then only we can engage.
Yeah, yeah, yeah. Just gotta. It's you know, you just gotta know what markets require patience and what markets are ready to move. Yeah, neutral, same.
And Chris,
Cool.
sometimes if you know the clear drawn liquidity, still we are unable to engage in trade. So any tips for that? Because
Yeah,
in the higher time frame perspective, we are able to narrate it properly. We can see the draw, and but sometimes because of the markets and all that happenings, right, it's very difficult to engage in trade. So we will always go for power of two, but still sometimes it will stop out for us. And is there any trick to break that?
yeah, yeah. It's just you know, again, it's just knowing what markets we got to let develop, what markets are ready to engage. I think indices right now, U.S. indices rather, and the metals are probably not the markets that are ready for, I guess, risk to be put on. Um, Last week we on the call, the live call, uh, we pointed out the equal lows that were here, and the move, it looked like a very promising move. There's honestly there's not even a well, maybe it is. Let's go to a different feed. Oh no, it isn't. Well, yeah, I mean this is the same kind of gap. But last week it looked very promising that we'd run to these lows, and we were looking at this, right? Price ran up, took out liquidity. There's also SMT between Nasdaq and US 100. We have this 4-hour change in state, and then you have this little redistribution here, right? Kind of propulsion block scenario. right? And so 9:30 opens up, and then we're playing inside of this range, right? So you can go to the 30-minute time frame. All right, so the 30-minute time frame showed this. Where's the low? So the low was here, right? The 4-hour CSD was up here. This was that little redistribution, and we came lower, and then 9:30 opens up, and it has the I'll get a little more technical here. This little point of fair valuation on that 30-minute candle inside of the fair value gap, right? And then it pushes lower, and I guess because of the gap, and those gaps usually act as very strong levels of support or resistance. It pushed back up into the range. So markets that I think are ready. Last week inside of Club 72, we were looking at the yen last week. Yeah, exactly. JPY pairs. Look more. And maybe such a there. So, oh well, happy Father's Day, and happy Father's Day to anybody else that is listening at this time. Okay. All right, so CAD and yen. Obviously last week, right? We were looking at the yen. All right, we were looking at the dollar yen. We were looking at the thing about the dollar yen is we had we were thinking that we would get power of 2 from here, and then it would go higher, and then we'd be able to attack like 2R or something like that, right? But that never happened. We never got power of 2. But the issue that I saw with the dollar last week that kind of worried me was the fact that DXY had already capped, and then going into this day, the DXY had gapped lower, right? So that was kind of tricky. But across the board, which I don't think the dollar yen would be the asset that we should look into, because the dollar is still moving lower. What I think would be the better asset is EJ. So we saw last week that EJ across the entire Euro basket, it gained strength. Whereas most of the other assets ran out this low, right? EJ created a failure swing, right? So we have inversion fair value gap, another inversion fair value gap, right? I believe that these highs are ready to be taken. And what's even nice is that we've done business under the weekly open and the monthly open. If we look at the weekly chart, we run down into this weekly opening price, which is nice, right? No different than what we did on the previous week. Weekly opening price, nice rejection, right? So being wrong, and this is I always ask myself, would I be okay being wrong in this scenario, right? And if I'm confident that, hey, look, if I'm wrong, I'm just the market just gave me random distribution, right? This is one of those scenarios. So I think EJ is the early play for the week coming. Obviously, we need to see how the week opens, if there's any gaps and things of that sort. Are we at all-time highs? Damn, that's crazy. All right, yeah. I mean, yeah, we we're pushing on EJ, but yeah. So I think 1788. We can round it to 179 is a good play. I wouldn't mess with Ozzy just yet, even though we're seeing Ozzy as having unfinished business. I do believe that this is the ultimate draw, 102,400. We closed inside of this range last week, which is nice. If we look at our 4-hour, I wouldn't say that there's enough information to just go long from a technical standpoint if we're following some type of rule base. But we do have equal lows here, and we do have unfinished business above market price. CAD JPY looks nice as well. Inversion fair value gap. And a lot of times when we do stuff like this, we ran this low, we got back inside the range. We ran this low, and we got right back inside the range. You know, the chances of us running the low again are pretty slim to none. Right? We didn't really show true intent to leave the level. All right. So above market price, we have low resistance signature here. So 110, 400 would be the level that I'd want price to get to, but we also have these equal highs that should, you know, serve as a bit of a magnet for price as well. Right. And then we took out a weekly low. This is a pretty nice close for last week, diving into the weekly down close candle. All right. So the yen, guys, the yen would be where I'll put my focus at. You know, if you're a guy who kind of trades, you know, multiple assets, Club 72 chat, we'll be focused on this to start the week. I think somebody put in the chat about Euro AUD. I'm not. I'll be honest. I'm not super clear on this. I don't like markets that are like this. Right. So unless it's giving me, I don't know what the daily looks like. Yeah. Right. So I don't have a daily change in state. I don't have a weekly change in state. I just have a market that is basically in a range. This is where I prefer to use the base currency. Right. If it's showing strength, I'll use the base currency. And there's a concept that I've been kind of studying, which is like basically where the liquidity or the volatility rotates is like a basket of like a liquidity like a rotation. I'll show you guys some examples, but it's kind of forecasting which asset will have the explosive price action going into a particular week. I haven't figured the full study out yet. I'm still kind of building case studies, but it has been interesting so far. But I don't really like the asset. GA, again, from a technical standpoint, if I'm following some type of rule base, I can't really commit to anything in terms of bullishness. And I like to have alignment, right? Or you know, some type of symmetry in terms of the assets that are being traded, right? So if I see EUG, you both have very clear bearish intent or very, very clear bullish intent. It just adds confidence going into that week for that asset. So right now, anything XXX yen takes the cake. If we look at yen futures, let's go weekly, right? This weekly volume imbalance is what's got me really high on the yen so far. Right. So we saw rejection here. We saw rejection last week. I mean, I think the odds are in our favor that the yen drives lower. Euro has strength. Euro drives higher. Euro CAD, it started to look promising last week. But I think where I might have been short-sighted was we traded below this low and we closed. Right. On the weekly. Now from a monthly and quarterly perspective, we're bullish, but I'd very much rather see the CAD take out this previous month's low, right? Because right now we have equal lows, right? So I was looking at it last week and I was thinking, you know, hey, we have inversion fair value gap. We took out liquidity here. Daily change in state. But what I didn't like is that we pushed below on a Friday, we pushed below fair valuation and we closed. Now it's still not bearish because if you guys look, you have this and then you have this, right? There's a very, very high likelihood that we push above here. Now, I would recommit to being bullish on EuroCAD if we push above here, right? Then I think at that point, rather you trade intraday or higher time frame, there's opportunity either way, right? I think it's truly confirmed at that point. Bitcoin, we're calling Bitcoin, which this has already played out, down into 1035 and then 98 is the monthly inefficiency, quarterly inefficiency. Oh, sorry, monthly. Yeah, the 98 level, 98 even. Ethereum has already pushed down inside the level, pretty decent rejection. I don't think it's ready for any new engagement so far. I thought we push up here, but we still ran lower. I'm sorry, guys. I didn't even realize the chat. It is correct. 112, 167. To how we into on this. Honestly, we're coming into a new week, right? This is one of those scenarios, I'll be honest, right? As a trader, you just got to make a decision. Rather it's right or wrong, hey, look, protect risk. I see the power of two, right? I've been looking at it all weekend, all weekend. I think allowing the weekly opening price to open, right, and just taking an execution below weekly opening price is good enough, right? And then we just live with whatever the market distributes. But if we were to ask ourselves from a technical standpoint, from a rule-based standpoint, Jasp, is the rule set there? Is the formula there? Yes, it's there, right? So we take that execution and we live with it, right? We just protect risk. That's all that matters. Do you think that in this last quarter of the year, using the COT data would be better, or just wait for the new year to come? I don't really utilize the COT. I don't really utilize COT, guys, because the way we view prices is it's almost like a X-ray beyond COT. So we're already using very proficient tools to see where price is going. Personally, I think things like COT and those more macro fundamental tools are used for people that don't understand what we understand. And that's not to be boastful. It's just I'm respecting the tool set that I've been given and that I use, and I'll look at it, but I don't use it to to decide. Yeah. I think it was something else I was getting ready to go to. CAD, we looked at Euro CAD. Oh, last week, right? Last week I was looking at this, and I want to speak about this because I gave an analysis on this, and we kind of bummed out on it. But this was a market that we got into. Again, I don't like these types of markets, right? Because it's when you get in these types of markets, the whatever rule base you have, it tends to just not play out. But the reality is, if I were to go back and I were to grade ourselves on the analysis from this, right? We have a monthly inefficiency below market price. Price is taking out stops, right? The typical rotation is to go from stops to imbalance, and down here we have a low resistance signature in price, right? There's no clear or confident price delivery, right? We know what confident price delivery looks like, right? True expansion and, not playing around like this. So that was the deal with AudiCAD, and Audi for some reason just tanked last week. There was somebody that put a chart in the chat, Shan, CAD JPY evaluation. I want to see where you're seeing fair valuation at here. Yeah, this is a balanced price range. Or maybe you're looking at something different. I'll have to see. Yeah, I mean, what you have here is decent. I don't know where you're seeing the fair valuation point at on this, but the terms don't matter, guys. I don't want to get too caught up in terms because that's just, I mean, it doesn't matter as long as you see price the right way. It doesn't matter what you call something. But if from what I see, you're seeing it the right way. You're seeing the things that you need to see. Um, that's all I have, guys. I think that's pretty it for going into the week. I'm glad we were able to have a bit of a lesson. What is the real meaning behind the correlation between yields and DXY? Yeah, so
Yeah,
yields.
sorry. Yeah, I think this is quite a relevant question. I don't know if you remember
Mhm.
during the week, I asked if you could just touch a little bit on intermarket analysis. And I think this has more to the question that the user just asked right now. It's something that I've been wondering about, like the yields, DXY, and futures and all of those things. Well, it's basically intermarket analysis. So I think if you can just touch on that a little bit,
Yeah,
bonds, yields, and all of that.
yeah. All right, so I'll give you guys the um. Let me give you the core framework first. All right. Uh, the the yield market represents interest rates, right? And we know that interest rates are what drive either the strength or the weakness of a currency. Okay. The dollar, DXY, is directly tied to the yield, right? Right. So if the interest rates are high, then obviously there's going to be more flow into the dollar, right? There's going to be more interest to the dollar. If interest rates are low, right, and they're going to be risk off with the dollar. All right. So it's typically it's directly tied to the yield is directly tied to the DXY. Right. Now the bond market is just the opposite of the yield. Right. So when the bond market is up, yield market is lower. Bond market is lower, yield market is up. Right. And the way we use the two in terms of intermarket analysis is simply just looking for SMT. Right. Either you see SMT here or you see SMT here. No different than when you're looking at EUGU, right? Or any other assets. Now, something that this is kind of a new occurrence since I've been trading is I've never seen I've never really seen a market where and I'll be honest, I don't understand it fully. I'm trying to understand it. But I've never really seen a market where there's been a particular time where the yield and the DXY moved opposite of one another, right? Because you guys see this movement here, right? When the yield's going down, the DXY is going up, right? And I personally, I think that is, we've been saying this part, there's a lot of uncertainty in terms of the the U.S. economy, I believe, or just maybe not the economy, but monetary policy. Um, I haven't personally seen the misalignment like this. As you guys can see, typically we're in sync, right? If you guys look here, you see the DXY go take out this high and the yield don't, right? So this is SMT. So we use that to our advantage, right? So we use that to our advantage. If we're trading Euro USD or Pound USD, then we'd be buying those assets, right? Now, if I bring the bond market on here, ZB1, I'm sorry, ZB, right? If we bring this here, then you'll see this market. Then you'll see how these two markets are completely inversed, right? So if you look for SMT in these markets, so whenever these markets are getting to PD arrays, right? So if we want to kind of predict, hey, um, is there going to be some type of rotation, some type of flow or liquidity injection into a particular pair? We look at the bond the yield market and we say, okay, cool. This market is making it to a higher time frame PD array, right? Then at that point, we might see some type of volatility show up in the majors. And then what we do is while price is at that PD array, we just look for SMT across the basket. So when I say basket, what I mean is the dollar index, the yield, and the bond. Does that answer the I guess the inner market analysis question enough, or is there still some uncertainty about this?
Yeah, I mean, I guess in regards to the yields, interest rates, and bonds, yeah, I think it can help.
Okay. Yeah. So just to keep it simple, just to reiterate, you analyze price action on these assets the same as you'd analyze anything else. In a textbook scenario, the yield and the dollar move in sync, right? And the bond moves opposite. Now, in today's time, we have a market that is a little bit different, but I do think that the dollar and the yield seem as though they want to get back in sync, because if the dollar begins to drop, right, and yield, which is still sitting inside of this weekly, because the order flow on the yield is still bearish, but we look at the order flow on the dollar, it's bullish, right? And that's not a common occurrence. So the two do get back in sync, right? If the dollar comes and closes here, then guess what that means? That means EUGU, right? We know what to do, right? We're buying those assets. We're buying the shit out of those assets, right? Yeah, that's pretty much it. It's not to be overcomplicated. It's just you just got to know DXY flows in line with the yield, and bond moves opposite. What could be another path of study for you guys is to see how you could do intermarket analysis between the bond yield and the indices or the stock market. That I don't. I'll be honest. Just out of transparency, I don't have a confident answer for you guys on that. But it's just another step in terms of understanding the fundamentals behind this stuff. Is there any more questions? Anything else that you guys have? Anything you guys want to go over? If not, I'm gonna jump off here and spend some family time. All right. All right, guys. So this was a really great session. I think the lesson at the beginning of the session was really good. Let's build on this. Let's have a yes, sir. Thank you for joining. Let's build on this. Let's have a great week. Hopefully everybody shows up in the chat this week, and we'll have more lessons to share and learn from. So good luck, guys. I'll see you guys inside the chat.
Chris,